Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. I'm Mark Gardner. It's the 11th of November, 2025. As investors rejoice as the longest shutdown in US history ends, maybe. So it's got through the Senate, got bipartisan support, which probably means that it will get approved. It's got to go to Trump. But yeah, I'm not. Yeah, today's going to be a short one, folks, because this is possibly up there with some of the dumbest moves I've seen in market history. Essentially, so the facts about all this is, I mean, where the headline's brilliant is that government shutdown ends was the headline. So it hasn't ended as yet. And essentially, there's a lot of information about how the government employers will get back pay. Contractors won't get back pay. That's 65% of the government payouts. So really, only 35% are going to get back pay. This is only a temporary funding bill that they're going to approve till January 30. So I think what has genuinely happened is the backlash that's come for both parties, even from their own ranks, particularly around the holiday season and air traffic control being shut down, means that they've just funded this thing to get through the holiday season. And look, there's been thousands of flights cancelled, staffing shortages, etc. It's obviously delayed economic data, and we really will have, there will be, I would expect, at least a $15 to $20 billion damage to the economy in some way, shape, or form. Given the last one was the second longest was 34 days and was a fair length of time ago. Inflation adjusted, it's going to have to be 15 to 20 absolute minimum that it's going to cost the economy. So yeah, hopefully, fingers crossed, we'll start to get some economic numbers back. But as you can see, yeah, we'll have a look at the market map here just now. All of them, all of the big tech names rallied. I don't necessarily know why it was a specific catalyst for that part of the market. But look, it seems to be where all the money ends up. Where all the money ends up heading into whenever there's, whenever that buy signal comes on board. And yeah, it is just bewildering, really. The market's essentially rallying on the back of being rewarded for Congress or barely doing their job. I mean, we've had quite a bit of this, this behaviour going on in markets where Trump or the Trump administration or Congress will break something, and then when we rejoice them resolving something that was already broken, and then the market's 5% higher. Which is just, a little bit bewildering, but here we are. But yeah, basically we just bounced back everything we've lost most of last week, nearly. I'd be pretty cautious on this rally because the details are largely horrible. And we're basically going to go back into this situation again in January. Because no one, judging by the details or the limited details that are out, it doesn't address any of the major policy concerns that that either side had. It literally is just a temporary funding bill to get through the holiday season, so everyone doesn't hate both parties. We did have CoreWeave out last night. It smashed expectations on top and bottom lines, but was off about 1.5% in the aftermarket, just on the back of concerns over decreased margins. We do have a few names tomorrow. Oclo in particular we'll be having a look at here at MPC. Then we've got Cisco later on in the week. C Technologies is it's Singaporean based, but it could be interesting given the very much involved in the AI and tech. We've got Fed speakers towards the end of the week. We probably will get that CPI number, but it'll depend on, we're talking maybe 24 to 48 hours, people coming back to work. So look, we'll be interested. I'll be interested to see how they're going to do these economic numbers, whether they're going to release two on a delayed basis or whether they're going to release them all in one go and try to collate all the numbers. Either way, going to be it'll be fairly messy and a fairly dynamic calendar. So I would, we will very much have to play it by ear for the economic numbers for the US for the next couple of weeks, because things could just get randomly released as these guys come back to work. So JD.com should be pretty interesting, I would have thought, and 10 Cent Music. That's their Wednesday. 10 Cent Music's on Wednesday, sorry, and JD.com's on Thursday in our time zone during our session. But apart from that, Aussie employment on Thursday. We saw a huge bounce back in gold, silver, copper, platinum, uranium, and lithium. So all of the hot thematic trades are all back on the table. Essentially what's driving the money straight back into the AI trade is obviously what's driving money back into these. It's all hot money. Because none of it makes any sense from a correlation basis, to be honest. There was talk again about, more rate cuts in December. There was no basis for that. And there was no movement really on trader rate expectations, but there seemed to be a lot of stories on social media and on the news wires. But I just think, yet again, it's just optimistic stories tend to obviously breed and fill the news wires, and everyone just piles in. So I think any real extended optimism on this temporary break in the shutdown, which is what it's going to be, because I don't think I've ever seen a shutdown have a temporary funding bill that's only 2 months or 2.5 months old. Normally they're at least 6 to 12 months. I would just be very cautious of, and I think we'll have NVIDIA's earnings next week will be a massive deal. And until then, all of this will just be noise. I wouldn't be surprised to see this give it back tomorrow, or I wouldn't be surprised to see this put on another 2%. It's throw out the book a little bit at the moment, because we really haven't seen weird movements like this and erratic policy like this, and then normally correlated markets turn around and be just completely correlated all of a sudden. So I'm a little bit lost. So hence why we're just keeping this pretty short today. But we remain fairly cautious. But it is a definite saviour for that for those technicals. We've got basically the after having the dailies being a mild sell in the Dow, S&P and NASDAQ. That move last night has immediately pushed them back into strong buy. And that's improved obviously for the Aussie as well. So that was my biggest concern, because as I've just been harping on about, the fundamentals don't seem to make a hell of a lot of difference. So these technical momentum signals will be pretty much most of what I'll be watching. So, and if they continue to show positivity, and we get a positive weekly close this week, we're probably sideways or up, until it's not. We'll be keeping a strong eye on those, and we might go into a little bit more depth into how they're constructed over the coming week, because there's not a lot to talk about in terms of the economic and earnings data. But have a great day, everyone. Enjoy the bounce, and we will chat again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.